Oh, welcome, my fellow stackers. How you doing? So glad you could join me tonight for Mastering Metals. This is episode 18. Are you ready for some fun? Are you ready to learn? Are you ready to get pumped over silver and gold? Well, I'm Yankee, your podcast host, and I'm joined by Chase Turner, CEO of SD Bullion, and James Anderson, the senior market analyst for SD Bullion. Hi, guys. How you doing? Good to
Hey,
see
Yankee.
you. Hey, man.
Good evening. Good evening.
Uh,
Happy almost tax day.
Happy almost tax day. All right, you had to say
Oh,
tax
and
day.
happy belated birthday.
Thank you. I appreciate that, Chase. Hey, James, what's up, man? How you doing?
I'm good. How's it? Thanks for having us back.
Ah,
It's fun times in the gold and silver market.
it's crazy times. So much has happened since our last podcast. I mean, we're talking tariffs, trade wars, the stock and bond market volatility. Let's get right into it with James on our first of three segments that I like to call markets and macro. And let's begin with gold, James. Even with today's, I think we had a little dip today, right? A little dip in
Mhm.
gold.
Yeah,
We're still making higher lows, aren't we?
yeah. I mean, you're still above 3,200, and the chart looks like it wants to go higher. So tomorrow it wouldn't be surprising to see it go beyond 3,250. So we'll see what the trading brings overnight and then tomorrow morning. But the chart looks bullish for it not to dip back below 3,200 and to start rising overnight is bullish, on the short term.
Do you see any geopolitical or domestic policy changes on the horizon that could derail this bull market that we're seeing?
Not really. I mean, all things kind of point toward they basically all point. The one thing you could say is maybe an agreement that happens between China and the U.S. There could be a sell-off, something like that, kind of came out of blue sky.
Mm-hmm.
And I'm not sure. I mean, the 90-day hold was enough to give the green light for it to get bullish again and start popping and going higher. Silver's taking its sweet time, but I think it'll join very soon, going higher as well. But yeah, that's that. And I mean, maybe some type of refrain in the war in Russia and Ukraine. That's another possible thing that could take off some of the premium right now for gold. But I'm still looking and thinking that at some point this year we do retest toward the 200-day on the gold side. But ultimately, I think gold ends up higher than all the prognostications. I mean, most people out there, for instance, in the London LBMA gold guesses for the year, 3,300 was their highest one, and we're here almost at 3,300 at the beginning of the second quarter. And so you have Goldman Sachs, literally sounds like gold bug Sachs now. They're saying 4,000, 4,500 is even possible
Amazing.
this year.
Amazing.
So
Yeah,
and I've seen bank desks banging the table for you got to have 30% central banks of your sovereign wealth in gold now, not 10%. That's not going to cut it. And so that type of stuff, it's really big.
Well, the title of this podcast, this episode is Silver finally about to outperform gold? Because historically that can happen in major ways. So before we got going, actually just the three of us chatting, we were talking about the GSR, right?
Mm-hmm.
Where are we at now with the gold to silver ratio?
So it's dipped below. The spot gold silver ratio is now at 99. And I was looking back at like 91 when it got over 100 and back during COVID. And so generally what happened in both those situations was the following month after it went down. And then precipitously went down,
Right.
3 or 4 or 5 months later. I mean, you had a situation after COVID where it went to 124 and then by August it was down at 69, right? So from March to August, you had almost halving. In 91, it went down to below 80. A few months after it went to like 105, 106. And so, it could go higher. Don't get me wrong. I mean, if we have a deflationary nightmare where banks start failing and stuff like that, maybe. But I mean, my money on the table would be for it to go down through the summer. And you'll see, I would think traders switching from gold to silver and trying to get more beta there.
Very good. I agree with you. Hey, by the way, I'm seeing questions popping up in the chat, guys. Later on during our podcast, we're going to be opening it up for Q&A. I'll open it up in the chat. So get your questions ready. James, I saw your Friday video. I always look forward to your Friday videos on SD Bullion. And by the way, anybody watching right now, we got 380 people watching. If you're not subscribed to SD Bullion's YouTube channel, you got to do that so that you catch James' weekly videos. They're awesome.
Thank you. Appreciate that.
Oh.
This past Friday, I think we opened up with Ray Dalio, who's been on kind of a press tour for his new book coming out in June. And so he was on Bloomberg, he was on CNBC, and he was actually on Meet the Press on Sunday morning, which is kind of strange for such a dense subject to be on the normie channel, like Meet the Press. And you're talking to grandmas and grandpas generally when you go and Meet the Press. And here he is trying to pump dense information into these people's skulls, saying like, look, man, this is not just a regular R for a recession. This is like you have a whole host of big force type, tectonic forces at play here. We're talking about geopolitical,
Right.
what's going on in terms of the monetary system. It's changing. He even, he keeps saying in public interviews like debt is money, and it's kind of a half truth. I mean, debt, has been money for a long time, but it's going to start failing. I think that's the other half he needs to start telling people. The bond market's starting to fail, and that's why people are running to gold.
Ray Dalio put out an interesting video, Principles for Dealing with the Changing World Order. Did you see that? Have you watched that video?
I've never gone and read his entire book, like word
dude.
for word,
Yeah.
but I've seen, small, PDFs and scanned them and kind of understand. Yeah, he's doing more or less what other people have done before, where they go back in time and use cycles in history and the kind of rhyme of history repeating and looking forward and see. It's one of those Winston Churchill quotes. It's like the further back you can look, the further ahead you can see. And so you have to pay attention to history because, the technology is always changing, but the human beings underlying are always the same.
Yep. You also mentioned in your video how our federal deficit is now up 1.3 trillion. That's like 22.8% from fiscal 2024 at the halfway point. We're on pace to exceed 2 trillion. That's crazy, James. What about Doge? Is this...
All the hopium about Doge is, it's kind of waning away. I mean, I appreciate the fact that they're exposing a lot of the small chicanery that's going on and stuff like that. But when you add it all up, it doesn't amount to much. And the fact is that we're spending at proportions that would be akin to something like a world war. And so, you have over 2 trillion in deficit coming this year, likely, and you have a situation in the bond market that's revolting, essentially. I mean, you have bonds on a volatile basis in terms of the yields just exploding higher recently, and that's something to keep an eye on.
Trump, I just got to mention him, okay, because that was pretty wild just between our last episode, 17, and this one. He eased up, though, on the tariffs. In fact, I read, I think it was Saturday, he added some new exclusions. Well, maybe that'll make Apple happy. I don't know. But did this whole thing, the whole bond market decline, especially the bond markets, did that force Trump's hand on tariffs, in your opinion?
I'm not sure, how close either are. You had a lot of people out there speculating that it was China and Japan kind of revolting, and I could see Japan. They're one of the largest sovereign debt holders in the United States. I could see them kind of revolting and selling off, and that's probably what it was. It was some major market selling off, and if you have the Dixie dropping below 100, the dollar is starting to show its signs that it's in a secular bear market.
Yep.
Not in a bull market like it was pretty much since the global financial crisis of 2008 to now. So that's a 17-year trend. Imagine if you go through 17 years of bear market, what that looks like. So I think that's the phase transition that people are trying to deal with. And that's why you see such gigantic moves in the bond market.
Yeah, the dollar got slammed, like you mentioned, under 100.
The administration wants a weak dollar. We all know this. The question is, can they control it to the downside and kind of keep it under management? And if they really want to reshore America, they need to have the dollar weak.
I mean, is that the play? I mean,
that's the plan.
Really? Trump wants a weak dollar.
They say, look, the stock bubble is over. This idea that we can just have these stock bubbles and like a small percentage of the population getting mega wealthy and everyone else in the middle class just, not doing well. It's just, this doesn't work for our voter bloc, the people who voted us in. So I think that's what they want ultimately, is a reshoring and a weaker dollar.
Well, it does make our sovereign debt cheaper, doesn't it?
Bond over the bullion over bond trade is the most important thing. Like if you look out into the future, I mean, you have a bubble in both the bond market and the stock market, and they have to kind of both get reweighted to gold. And in that process, silver should do well as well. So that's the overall treaty and thesis of the 5-10 years looking out. So
with Treasury suffering big time, are we seeing finally the real safe haven asset, gold, flex its muscle a bit here? Right?
Central banks, they've been front running it now for 3-4 years. I know a lot of the stackers listening have been front running this for a decade plus.
Yep.
I mean, we've really seen this coming. It's taken longer than I think a lot of people expected, but that's just generally how it is. We're dealing with forces that are gigantic and so large that Ray Dalio has to go and meet the press and talk about it in grade school terms.
Well, that's probably good for me. Actually, I like Peter Schiff. I like listening to him. Sometimes he gets a little overboard. He did sound the alarm, I think it was on Thursday. He said, I've never seen such a mass sell-off of U.S. assets, U.S. dollar, bonds, stocks getting killed. I can't remember when the dollar lost 3.5% against the Swiss franc in one day. America's ride on the global gravy train is about to come to a screeching halt. Buckle up. I mean, is that a little too extreme, James?
You gotta throw the buckle up in there if you're gonna do a really cheesy marketing. That's a standard act. That's excellent. And then the second thing is he's right. I mean, this is his thesis that he's had all the way since his 2010s books, right? In the sense that everyone else outside of the United States is going to do better. And remember, there's 22 of 23 people are outside the United States, and we're the one of 23 people inside the United States. So we got to take our green colored glasses off and maybe travel a little bit to kind of get a perspective. I think if you travel around the world, you realize, oh, everybody has the internet, and B, like they're very smart and they're very hungry and they're ambitious. So we have a lot of competition that coming at us. So how are we going to handle that? This idea that the Swiss franc is strong is great, because when I look at the Swiss franc chart, I see gold breaking out on the long-term chart, and then I see silver still at 1/3 of its 1980 nominal price in Swiss franc. And I bang the table every week just saying, hey, Swiss people, I know it's 8.1% for your VAT, but buy it because it's so cheap. It's ridiculous, and that just shows me how early we are. The fact that silver in Swiss franc is nominally 1/3 of its 1980 high, and that's in 1980 Swiss francs. So we have a long way to go, long way. I mean, think about it in U.S. dollar terms. We're past the halfway mark in the nominal dollar, right?
Yep.
We're at 32, and 50 is that high, and everyone looks at 50, but in Switzerland, it's even more clownish.
Yeah, I got something I want to show you too. But before we get, Chase, you're learning a lot. Are you learning something here? Because I am.
Of course.
Just listen to
every time
James.
James talks.
I
Yeah,
feel smart. I go down to Mrs. Yankee. I'm like, I just listened to James. Oh, what'd you learn? What'd you learn? Oh man! But I do even on the Friday videos. They're really fun. But I'm curious, James. Did you see this from John Reed? He says, let's see, China hit the afterburners in gold in April. He just dropped this today. By the way, John Reed is a senior market strategist for the World Gold Council. So, World Gold Council seems to know what's going on globally in terms of gold purchases, especially. And he says Chinese ETFs have seen more gold inflows in the first 11 days of April than the entire Q1 of 2025. Second only to the tonnage of gold added by U.S. listed physically backed gold ETFs. Second only to that. Gold held by Chinese domiciled ETFs have increased a stunning 46% year to date. Wow.
Yeah, it's a lot.
Wow, that is a lot. That surprised me a bit. I mean, I talked to my local coin shop dealer, Tim, a lot, and he loves to say, wow, China, they're just buying it from themselves. He even said yesterday to me over the phone, he's like, I'm still looking for where China is getting the gold. Is it their own gold?
So yeah, China's the #1 miner of gold in the world, and that's been the case for like a decade.
Mm-hmm.
And they also import a lot that's opaque through Africa. I mean, they're winning the proxy war in Africa. They've been mining out of Africa for a long time now, and we don't know exactly what flows are coming in from Africa. I mean, they have a lot of bilateral trade agreements in those countries. They build infrastructure for those mines, and the local population benefits from that a lot of times. But they basically went out on a wild gold run for the last 10 years in Africa, and they've been mining like crazy there. And remember, South Africa, for instance, is like 1/4 of all the gold ever mined in history. So I'm sure the amount of gold that they're finding in Africa, depending on where they are, is pretty good in terms of tonnage overall. And it's opaque, so it's hard to know. I mean, we have some view into the physical flow, that goes into China, but a lot of it's opaque. So we don't know fully. What you can know is that China's #1, India's right there, #2, and they want gold. They always do historically, because they've lived through more financial crises or currency devaluations, and it's in their genetic blood to remember that stuff. We have amnesia in the Western world. We fell asleep a long time ago when it came to gold and silver, and we're relearning that now. But we're early. We're like the very small contingent of people who understand this wholly. But more and more, the average yuppie out there is going to start learning this the hardest way, in the sense that their pocket's going to be on fire and the dollar's not going to be holding the value that it should, and stocks and bonds won't be holding value compared to bullion. And so that's just one of those things. It's going to take a while to play out, but the charts just scream it to me when I look at them.
What's your prognosis in the mining sector? The gold in the ground, not out of the ground. I mean, think of it this way. Oil is way down. Gold is way up. That's actually good for miners, right? In terms of the all-in sustaining costs. So what, between now and the end of the year, what do you think? Are they going to play catch up soon?
I think they'll have times where they play a little bit of catch up versus bullion, but they'll be fleeting. They've been fleeting since 2007. If you look at, I have a chart that shows the 21st century of bullion, gold bullion versus all the major global gold indices. And what you see is in 2007, this trade that occurred where I think hedge funds started going long on spot gold, and then they also went short on major miners. And so you have this huge amount of shorts out there on major miners that kind of subvert the miners and kept them depressed and underperforming for, what is that, 18 years now? And I don't expect that that's going to change. I think that continues. It's kind of like the 1970s. Bullion outperformed all the miners really until 1980 high. It wasn't until the 1980 price high and after that the miners outperformed bullion. So my expectation is we'll get a rhyme in time, and that's the same scenario. So if you're someone who likes miners, then fine. I mean, but just remember that you're speculating in something that's somewhat dangerous, especially if it's just one mine.
Oh yeah.
If you're going to play around, if you're going to do something safely, maybe do like the indexes, like a GDX or a GDXJ. That way, if one of them fails, like, hey, your entire bag goes down. But I've been burned before. I mean, I had holdings in a Russian mine, and then when that Ukraine war happened, U.S. Treasury took it.
There's a lot of risks.
You have to be really, really careful about domicile. And
jurisdiction.
Knowing exactly what you own and the risks involved, because it can go to zero. It's not like bullion.
It's not like bullion, and it's not stacking. And I don't recommend people start there. They got to start with the physical, and they got to buy it.
We're in the phase of return my capital. I don't, I'm not so worried about the return of capital, right? It's like we're in the destruction phase still.
Say that again.
We're in the phase of I want the return of my capital. I'm not so concerned about the return on my capital, right? It's like we're in the destruction phase. Like we're still in that phase where the big changes are happening, and a lot of companies and things they're gonna get destroyed. And a lot of countries are gonna nationalize gold. You got gold going $5,000-$6,000. You know how many of the greedy countries are gonna come in and say, you keep running the mine, but we're taking half the output. The central bank's buying it at a discount. So that kind of stuff is going to happen. I mean, you just have to be very cognizant of where you're domiciled. I mean, it better be a Canadian or U.S. company, my suggestion.
All right, Chase, I got to bring you into this. I'm going to come back to you, James, because I'm going to surprise you with another chart. I just thought of it. I want to bring it up and get your input on. But Chase, with all the stuff that's been going on since the episode 17 of Mastering Metals, what has been going on at SD Bullion? What are people buying? What kind of action have you seen because of all these trade war recession headlines?
Yeah, look, I think volatility helps the physical market out, right? And we've certainly seen a ton of volatility. I don't know if anybody's, at least that I know of, that I've talked to, has ever seen what we saw last week, where the market drops and on the same day it recovers maybe the highest.
Crazy, right?
So I think the reality is we just don't know what's going to happen, next. But I think that's why everybody's chasing gold right now. Right?
Sales good though? Have you seen?
Yeah, we've seen a ton of interest. The days that the markets were sliding off, and it's in some ways it's sad because even though we work in a physical world and we all stack physical, the paper price controls the actual price of metal, right? And when you have those big stock sell-offs, it drags the price down with it. But that created a really good buying opportunity, and a lot of people took advantage of it. I mean, overnight we saw 5x, 5 times more trading.
Wow.
In a 48-hour window, than the week before. And so, and a lot of people are actually coming in and also buying the dip in silver, a lot more than we had planned, because
Hmm.
as we since we carry gold and silver on our balance sheet, we have to kind of strategically plan differently, and we kind of have to, in some ways, guess what we think people are going to buy. For example, going into weekends when markets are closed, and we kind of missed on silver. There was a lot more silver
Hmm.
demand because the demand has really been, I would say, really been for gold in general. Obviously, silver is more affordable, right? So normally you're selling more silver than gold, and this year is just flipped. The demand for gold is really out there, and every time this volatility happens, the sparks just come faster and bigger. So, yeah, we saw a huge influx in business, and put our shipping team a little bit behind, and they're trying to get caught up now. But
Yeah, I was
yeah,
going to ask you because I did make some purchases and I haven't gotten
yeah.
them yet. They're coming,
Yeah,
right?
it's the
During that whole
2025 has
craziness.
been. Oh, I mean, January was one of the slowest months our industry has seen in probably 5 or 6 years.
Wow.
The industry was really, really hurting in January, really hurting,
Yep.
and then in February, was one of the biggest Februarys. If you just look at February isolated, right? There's only 28 days in the month, so it was one of the biggest Februarys in the industry history. And then,
Wow.
demand tapered down in March, and then April happened. So it's been so up and down. It's been very, very difficult to staff in this type of market where you go from literally, one of the worst months to one of the best months, and it's this back and forth. And so, yeah, it's been a harder year to manage those things as a
Hmm.
company. But overall, really excited to see all the. I think gold's gotten so much headlines
Oh,
this
yeah.
year, and so, like James was saying, it's just people are waking up. I don't. I think most everybody knows the dollar is worthless at this point, uh, and so they're starting to figure out, what else is out there that holds value, right?
What I'm actually going to bring up your site because I always go here. Like this is like a daily thing for me. I click the deals first. Sorry,
Yeah,
Chase. I
yeah,
just go to the deals first. I mean,
yeah.
okay, 90%. How hot has that been? Are
It's
people?
it's not as it's not as hot as it's not as hot as it's been in
Wow.
other markets. Now, to
Huh.
be fair, we haven't really featured it, and a lot of times, we're moving out, heavy ounces and stuff we're featuring. You bought some maples,
Oh
right?
yeah.
We had those really cheap, and we moved a significant amount of those, and we had to
The
like switch deals
rounds.
because we sold too many. Yeah, then we went to
Oh
rounds and we sold a
really?
lot of those.
I
So
grabbed those.
I yeah, I think you're gonna
Yeah.
see, but you can see the premiums on 90% have moved, right? So, 99 cents in January, that probably that
Yeah.
same deal would be like 49 cents. So premiums have
Ah.
doubled on
Okay.
90%, and
Interesting.
you're
Still,
you're gonna
but
see us
I
do
still
some
see it.
things.
I still see a slightly below. Did I see below 25 face for some of these? Yeah.
Yeah, yeah, yeah.
Oh yeah,
There's
that's
10
a
space.
great.
Yeah.
That is really good. Anything below that is excellent. So yeah, yeah. I think
So
I don't know. I think
we're gonna try
90% is
to
the way
do
to go
something.
for people. Yeah.
Yeah, we're gonna try to do something with 90%. What happened was,
Hmm.
the industry started melting 90% starting in December, and we stepped in because we do carry a balance sheet of silver and gold. We stepped in and said, "Hey, sell us all your junk in cheap. Like, don't send it to the mill. Like, don't do don't do that to 90%." So,
No.
um, people don't really know that. We haven't really told that story. We're probably going to tell the story. We did kind of hero junk silver in December, January this year for the industry, because we have a significant amount of it right now because of that. So we have a strong position in it. So I think we're going to be able to do some more stuff with 90%,
Hmm.
unless the market goes crazy. And then, as you know, when the market goes crazy, premiums of that jump, and it goes out pretty quickly because there's just not much of it, around, because they haven't been making it for 50 years now. So, um, yeah, I always say go to the deals page first. That's,
And
we,
then
we
go
tried
for
it.
what you're
We
after.
try to bring,
If
yeah,
it's
and then go
not
for what
there.
you're after.
Yeah.
Yeah. I mean, if you're a bullion buyer, that's what every week we're trying to bring bullion deals to our deals page for our
Hmm.
stackers, right?
Hmm.
So
That's what I love about SD Bullion. You guys started as stackers. You cater to stackers. You're focused on us. I really appreciate that. All right, James, I gotta throw this chart at you. Hopefully, let me preface it.
Mhm.
Did what we just go through last month, would you think that was an economic shock at some level? What Trump did, the tariffs, the trade war, are we seeing a shock to the system?
Oh, certainly. I mean, that was when he stood up there with those tabernacles of tariffs. That was one of the craziest things ever. Like everyone was like, "Wow, he really meant it." And here's some pictures to to nail it and drill it home for you. I mean,
Right.
that was, and it sent the markets into craziness. So, I mean, think about how difficult it is for stocks to try and figure out what their pricing is if you have tariffs as high as he was showing.
Hmm.
That's why you saw so much volatility and wild gyrations. And like, if you look at like, I always use the long-term charts of like gold versus the S&P 500, and it's rolling over. I mean, it's screaming the fact that hey, the bubble's over with. It's like down to 168. It's spiked down to
Wow.
165, and like that's the look that I had in the
Hmm.
Nifty 50s in the 60s bubble when they had the Nifty 50 trade. When it has the same exact look of it when you look at it on a long-term chart. So there might be a bounce at some here, and we might bounce up to like 180 or so. Basically 1.8 ounces to get the S&P 500. It could happen, but I don't see it going above two again. Not in this
Mm.
situation. Not with what this administration's up to doing.
Look
I
at
think we're going down further as time goes
look
along.
at this chart that I got here too. I want people to see. This is a historic performance after an economic shock. All right, when it happens, T plus 1 week, T plus 1 month, 3 months, 6 month, 9 month. You see gold. Sometimes there's sometimes there's a sell off, especially if there's margin calls. I mean, they go right for the liquidity. Gold hits. Definitely the gold equities get slapped around along with the stock market, the S&P 500. But notice the rebound. When you look out, 3, 6, 9 months, it really leads the markets. So I'm just thinking about the economic shock waves that Trump is sending and what this is going to mean. Again, this is focused mostly on gold. We're going to talk silver in a second, but do you see this as a likely scenario coming up this year?
Yeah, I mean, you already have the heads of the Treasury and the Fed. A lot of Fed talking heads coming out saying like we're ready. We stand by, ready to serve liquidity and use all various tools. Meaning we're going to buy virtually everything and blow up our balance sheet if we have to. And like the balance sheet for the Fed has been going down. QT is probably going to be ending real soon, and you're going to see it revert because that's
Hmm.
generally what happens. It goes down and then it goes back up, and it goes back up in multiples. So when you look out on like the long term, I mean, I'm guessing the Federal Reserve's balance sheet's at 7 trillion, but it could go to 20, before this cycle ends. I mean, you have a situation where it could possibly do that,
Well,
where
the
they
sig-
have to buy virtually everything from the banks so that banks don't implode and the system doesn't fail.
right. So right now we're seeing a lot of infighting, right, with
Right.
Trump and the Fed. So do you
Right.
see what is that a line in the sand for the Fed? Is that where Jerome steps in no matter what when he sees the banking sector
Yeah.
starts to
Yeah.
hemorrhage?
Because they talk about all the time like their 2% mandate. That's just
Hmm.
some arbitrary thing they make up, and they're there to like make sure the currency stays strong. It's like the currency's devalued by 99% since you've been around, so that's a lie. I mean, the whole point of them to be there is to make sure that the banks survive and that the bond market capital continues to benefit from the system and labor continues to get screwed. And so our job here is to make sure that labor keeps bullion, because ultimately that's the key. Is regular working person needs to have sound money in order to get through this phase transition that we're walking through. And so gold is the one that leads right now, and it's showing itself. But silver eventually, if you start doing more QE and more of this buying virtually everything, and the balance sheet starts exploding, and you have a huge secular bear in the dollar market, silver is going to scream.
Yeah. Okay. Great segue to silver. Let's talk silver. With all the recession talk,
Yeah.
the white industrial metal strengthened. We saw it strengthen, and then it's holding above $32. Why is that? I mean, usually
Yeah, I mean,
the
it's holding
recessions
pretty
has the
well.
opposite effect on silver, right?
Yeah, you would think if there was like a recession, like the big R word,
Yeah.
that silver would go back in the 20s and start, languishing down, and we'd go back to 26 or whatever the silver doomers out there are saying will happen. But that's not happened. You have a situation where it's bounced, and I'm looking at it, and it's entirely possible, as wild as this chart has been, for it to be above 35 within a week to two. That's entirely in the possibility of coming future. This idea that 34 is 35 is now a resistance that we can't get through is nonsense. We could be at 38, 42 sometime later this year.
Yeah,
So,
I thought gold would be 4,000 and silver would be 40. Like
yeah, I mean,
next year, not this year, but now I'm like, wait a
be
minute.
very surprised to get the 4,000 that the GSR is that high. I would be thinking in terms of 80s if that were the case for the GSR. But I mean, that's just such a huge GSR anyway. 80s is stupid. I mean, if you look at the last 60 years, like the median for the GSR is like 60. So I mean, just when you look out in terms of where we are right now versus where we're going, there's just a lot of room for silver to run.
Long way to silver to run. Some people feel like they missed the boat on gold. I actually did buy a little gold from you, Chase. I'm still waiting for that package too. I'm giving you a hard time. I'm sorry, man. You got slammed. My apologies. But I got a little bit of gold, but my focus was more on the silver in terms of ounces, because that's just, to me, it was like, this GSR is nuts.
The GSR is nuts. It's hard not to buy it.
Yeah.
Yeah. Did I lose you?
Is that me? Oh, am I? You crackled there for a minute.
Mike crackled a little bit.
Are you,
Okay.
yeah.
Sorry.
No, I think
We
it's on
back?
your end. Yeah, I think you're just having a little mic issue there.
Yeah. I've been favoring silver. I've been favoring both, I guess. Really, anything but cash.
Mm-hmm.
Still crackling.
Yeah, you might want to pull them out or whatever you're using. All right. Silver. Okay, I think we're actually. I want to talk to Chase. Hopefully, he'll get his mic switched, because I want to switch gears a little bit. Actually, while he's working on that, I am going to open the Q&A section, so people can start doing that. Let's get the Q&A going.
One point I want to make real quick.
Yeah, go ahead, please.
90% earlier. I mean, we're almost at razor thin premiums. The fact that it's selling at near spot is kind of a gift. Like when I talk to Americans who are just getting into the market, if you have a situation where premiums are razor thin like they are right now, 90%, and ASEs, Silver Eagles, are pretty low relatively to where they go when banks start failing, which I think was coming again. We're going to have more bank runs in the future. So the fact that you have premiums on our American, 90% and Silver Eagles, when premiums are low, it's nice to have those, because basically at these premiums, you could have a situation where the premiums, the percentages where they're at right now, can double, triple, quadruple, and you have a situation where you can do arbitrages if you so choose. So it's one of those optionalities that Silver Eagles and 90% can present.
More Silicon Valleys this year?
I mean, this year, I don't know. I mean, it's like think about how silly the pretext was last time. It was because they were kind of off-footed in terms of rates and their portfolios. And you had a situation where you had digital ACH bank runs, and so that system still exists. ACH still exists, and it's still easy to yank all your money out in a matter of days. So it doesn't take much to get people spooked and scared and having ACH bank runs.
Tim, again, my local coin shop dealer, Tim Marshall, he was saying, he was talking to one of the bank tellers, and she said to him, "It's almost like a bank run. These little old ladies. No. Now, James, they're going in quietly. It's a quiet bank run." He said they just go in and say, "Give me my cash. Give me my cash. I don't want my cash."
Yeah, I mean,
that was a big bank too. I'm not trying to start a. I'm not.
No.
You got to be careful here. But
other people who are worried, they look out and see what's going on, and they know the banking system's brittle because they've heard for a long time about the mark-to-market. The fact that they have these mark-to-model things, we basically threw gap accounting out since the 2008 global financial crisis. I mean, at some point you have to come clean with what's on your books, and when that happens, there's going to be big consolidation. I mean, the banks have been consolidating pretty much, for decades upon decades, and the fact that that's going to keep continuing, I think, and how it comes about is the question.
I got a super chat here from 28 Baby Shark. So that they get bumped right to the front of the line when I see a super chat come in with a question. Thank you, by the way, for that $5 super chat, 28 Baby Shark. What do you think will happen to silver prices when the 90-day tariffs end or gets lifted? What does silver do?
Yeah, I mean, the fact that bullion is exempt from the tariffs, I mean, that's already been stated. It's really a question of like, are we in hardcore recession or not? Is there going to be some excuse to drive silver down because theoretically it's not being used as much and all that stuff? But in the end, it's like we have a lot of demand for silver, and we have monetary demand coming on as well. And I'm not too concerned in the short run if you have a situation where a recession comes about and silver goes a little soft for a while. I look out on the bigger spectrum of things and think, look, we're in a huge change in the world, and there's going to be a huge demand for storing values. And gold is going to lead, and silver is going to follow. And so, yeah, silver is going to be more volatile. So you have to try not to get leveraged and try not to be silly about your footing, but get the bullion and have a long-term view.
You really do. You got to have a steel, or strong nerves of steel to be able to handle the volatility. Again, I just turned 59 yesterday, so my volatility threshold has become a lot less than when I was 29, right, or 39. But I still want it. I mean, I look to it as a potential barter currency, potentially, in a worst-case scenario. So I want the silver, but I think the upside is huge. Silver does usually outperform.
And it's going to be so wild. Like when it starts to go toward that triple-digit level and starts moving around wildly, there's going to be a lot of people who are going to sell too early. I mean, at least some of their stash, and they're going to be kicking themselves later. There's going to be people thinking that it's, some spike to 120 or something is the high, or, they're going to be all these people claiming tops, and it's not going to be the top. And so it's the blow off top is going to be something that's so big and so large. It's basically going to be something that's going to be in the history books and make the Hunt brothers look like tiddlywinks.
Okay, I'm going to play the devil's advocate because I get this comment all the time. Oh, I hear this triple digit silver. I've heard it for 14, 20 years. It's never going to happen.
Sure. I mean,
you've been saying that forever, Yankee.
Go look at the S&P 500 versus silver and where it is. So right now it's at 167. In 2011, it got down to 27. Okay, That was 2011, and I lived through that market. I traded through that market. 2011 is a joke compared to what we're looking at coming up. It's a joke, and 1980 is basically what we're looking at. That's the type of comeuppance that's coming. So people need to get their heads around this. This is a big tectonic change in the world. And so this idea that I think people have recency bias. They think what's happened in the last 5 years is what's going to happen in the future. That's not what's going to happen in the future. It's going to backfire in the faces of people who've been pressing down on silver for so long. It's going to be as bad as it was before. It's going to be as crazy to the upside as it will be in the future. So you have to kind of switch your mind around. That's hard for people to do because they've been beaten so hard by it.
Absolutely. And I think some people, again, have that short-term mentality. I've been in this for 2 years now, and it hasn't done anything. I'm selling all my silver. No, I've got those too. I get those comments all the time too.
It's a lifetime war, man. Silver is not. It's a big cross to bear. I mean, it's psychologically you have to do a lot of studying to prepare your psyche for this.
All right. The other email.
Saying that a silver quarter. If you look at silver quarter, like a 90% silver quarter tracking a gallon of gas. I mean, it's held its weight, right? Like, you can still buy a gallon of gas today, like you did 50 years ago. I mean,
your mic. I think your. Did you reset the mic?
Yeah. What are you getting now?
A lot of crackle. Are you hearing that too, James?
Yeah, I'm getting it.
Okay.
I mean, just to further drive his point. I mean, in 1964, let's see here, a standing quarter melt value is Washington quarter melt value is $5.80. So it's more than a gallon of gasoline. That's a couple gallons. And, when it's all said and done, I'm guessing it's going to buy you 5 gallons, or more. I mean, it's this idea that oil is rare and cheap and hard to find. No, it's not. It's freaking everywhere. And silver is not. I mean, that in a monetary crisis, silver goes into an extreme premium versus all other commodities. And I would suggest the same will be for gold. Gold is going to make, it's going to make oil look cheap. The fact is that we use bonds to make oil, to basically use that market in the 70s. We had people using the U.S. Treasury as the storehold of wealth. But if the bond market's going through a terrible time, you think that they're going to stay in bonds? No, they're going to go to bullion. So you're going to see extreme premium for gold versus oil. And at the same time, you'll see a spike in silver versus oil.
I think, how you doing, Chase?
How do I sound? Did it work at all? Nothing.
You might need to leave the room and come back. Maybe give it a go.
Yeah, that might actually help too. Yeah. And while you do that, I'm going to call an audible. I'm going to switch over to the Q&A, and then we'll come back to retirement insights with Chase, because I do have some questions for you, questions I get from my members. So,
I switched mics as
Oh, you're good.
oh, bingo. Okay, so I'm going to ask it now then. We're going to get to the questions in a second. The other email I get commonly with people that are my age or nearing my age, especially Chase, is what do I do in this market with my retirement? This has really gotten hot, especially people fully invested in the markets. I want you to talk to me about, the type of action you're seeing with your IRA depository. What are people doing?
Yeah, yeah. I mean, the last move down brought a lot of, I would say, significantly large IRA business
Mm-hmm.
because, look, if you're interested in physical investing, which pretty much everybody listening probably is, right? You can do that within your retirement account as well, right? So you can take your retirement funds and instead of exposing them completely to paper, right? You can move them into various different physical assets, right? Gold and silver being one of them. So, yeah, when you look at just for me specifically, I mean, I have gold inside my retirement account, right? Because I
Mm-hmm.
had they're funds that I can't touch, and you just do the math, and yeah, I get, like you said, I get more conservative every year that goes by, and so it's like, well, I mean,
Yep.
what's my safest bet? So I was fortunate enough to get some things lined up before the dip, so I was in there buying the dip with actually with retirement money.
Mm-hmm.
So yeah, and it's nice because it's all done at SD Buoyant. So I know the system really well, and I know where it's stored and where it's allocated, and I don't have to worry about. There's a lot of other people out there that will try to assist you with getting physical metal inside of a retirement account. But then there's a lot of problem people out there. James knows them. Knows them very well. We're not talking about just dealers. We're talking about the whole spectrum.
Mm-hmm.
Custodians, depositories, the whole thing. So, at SD Buoyant, we started a couple years back now, really getting into this IRA space because Tyler, the founder of SD Buoyant, he had 401k money from his pharmacy days that he needed to put into physical bullion. And through the process, it was just a complete disaster. And so we realized that we really needed to go out and create a solution for other stackers that wanted to put their retirement funds that they can't touch into something physical like gold and silver. And so, yeah, you're seeing a lot of that. I mean, at one point I looked and the Dow was down 13% and gold was down 5%. If you're 60 years old with a lot of money in retirement, I mean, you're pretty happy that you were in gold at that point, right? And
Right.
gold's already recovered. But gold is just a preservation. If there's so many ways to look at it. One thing I heard recently that I thought was interesting was, depending on what your retirement plan specifically is, everybody's going to be different, right? But
Right.
whatever your retirement plan is, and if you track it by an ounce a month, right? An
Mm-hmm.
ounce of gold a month on living expenses over, just you got to go back and look at 10, 20 years ago, what you think it's going to be 5, 10, 20 years from now. And it's almost like for the average person, an ounce of gold kind of pays your monthly expenses. And so it's kind of interesting to look at that, how it just continues to preserve and in a lot of cases outpace purchasing power. Like, a lot of people will talk about, real estate and stuff, but go look at actual consumer goods. Go look at gas. Go look at food. And gold not only has preserved its purchasing power, but it's way outpaced its purchasing power. Like the amount of gold it takes today to buy gas or milk compared to 30 years ago it's a fraction of the cost. And so, yeah, I'm a pretty big proponent of protecting your retirement with physical.
Yeah,
Yeah,
it's not at my age. It's not as much about capital appreciation as it is capital preservation. Not that I don't care about
Preservation.
growing it.
Yeah.
Preservation is important as we get older. I can't believe I'm 59, man. This is freaking
the
me out.
the lack of volatility is super important as well. I mean, gold is pretty
Yes.
steady. I mean,
Yep.
I know it looks crazy in a chart because most people use linear charts and it's going up a wall, it looks like. But if you use a logarithmic chart and you look at gold over like the last 55 years of this fiat currency experiment, it's just doing a steady eddy climb. Like 5,000 looks like a layup to me. I mean, it just looks like a layup to me in the next few years. So,
Good point.
you know, the old gold bug call of 5,000 gold sounded crazy, but now it's nothing. It's nothing.
And I'm not asking a whole lot from my gold and my silver. I want it to keep up with inflation. I want it to exceed inflation, but anything above that is gravy. I think there's an arbitrage, a gap with what real inflation has been, and it's seen everywhere, and it's yet to have taken hold in the precious metals markets. But I think we're starting to see it. Now,
here's the other thing that if we talk about preservation, right? Think about this. There's a lot of people out there whose children have IRAs. My children have IRAs. They have gold. You know, they're 3 and 5 years old. Can you imagine what that's going to be by the time they're in their 50s and 60s, as far as the preservation of their purchasing capital between now and the next 60 years? So, you know, it might not just be about you. I mean, anybody that you know that has a retirement, you know, government retirement account, you know, gold just makes sense. And it's, you know, everybody's got a different game out there, but the cost of putting physical inside of an IRA is significantly cheaper than I mean, a lot of things that I do, because you know, Yankee, like, we're both into the self-directed IRA space. So I don't just have funds in gold. I have funds in other things that aren't the market.
Right.
And
Me too.
those
Alternative assets.
Alternative investments, and those management fees are significantly higher than my storage fees that I pay for gold and silver.
Right.
So it's a relatively, you know, for retirement planning, it's very cost effective as well.
Tell you what I'm in the midst of doing right now. I got a check coming in the mail. The company I was with before I retired and went all in on YouTube, all right, had a 401k with them. Not a lot, but I wanted some tax benefits from it, right? So I just had them roll it over to a solo 401k. A check is coming, and I'm going to be rolling that into gold and silver, hopefully the Yankee Tim round, which I saw the second revision of, and it's IRA approved, right? So when that thing comes, I want to be buying some silver and gold in that. I can't wait. And then put it in your depository. I've been there. I've seen it. I've toured it. I trust it. I know you guys are legit, which is a huge deal. You got to know who you're doing this with and get taken for a ride. So if people are watching this right now, and they're interested in speaking with more detail, there's a website. I actually had it up just a second ago. It is ira.sdbullion.com. They should go there, right?
Yeah, go there. We had to build its own website because it's just become so popular. We had so many people reaching out about it. We needed to kind of give it its own space. And then Tyler and I recorded an entire podcast about IRAs in general, that when people watch it, their mind's kind of blown. And there's a lot of kind of light bulb moments in the podcast where they go, oh, okay, I didn't, maybe there's people listening to this that currently have a gold or silver IRA, but there's a lot of things they don't know about that space that we've learned in the last 2 years, because we've become one of the largest precious metals IRA dealers. That gets you behind curtains you weren't behind before. And we have a better understanding of how all the systems work. So go there.
That chart, that IRA comparison chart, is spot on. You got to take a good look at that.
Yeah.
Wow.
Yeah.
Oh, there's my video to look inside the SD Bullion vaults. So yeah, you got to go to this website and check it out if you're at all interested in protecting yourself from what I think is coming here. It's very important.
It's interesting. So Yankee, I have the same mechanism that you set up. I have the exact same one.
You have a solo? Really?
Yeah.
Oh, wow. Oh,
so it was, again, from stuff that was pre-SD Bullion. Right.
Yeah.
So the flexibility of those is great.
Yeah, and people sometimes forget that at certain ages you have certain flexibilities. If you leave a job, you now have the ability to roll it over to a self-directed IRA and do other things too. So if you're interested, check out that website. Again, ira.sdbullion.com. Simple to remember.
One thing that happened 4 or 5 days ago on Twitter, I had this guy reach out to me. He's like, he said, what did he say? He said, hey, I sent 3 emails to SD Bullion regarding IRA conversion 3 days ago. Still haven't heard back. So I'm like, all right, man, just call him. And I gave him the number, and he's like, I'm already in the works with blank metals, and I couldn't wait any longer. Just thought you wanted to know. And I came back and looked up who he's with. And of course, they're selling the scammy fractional Canadian, coins. And I put like a red alert, dude. You're going down the wrong path. And he came back and said, I put them on hold for now, and I appreciate the heads up. They did seem a little shady. I will call SD Bullion. Who should I ask for? Your own inventory and depository is a big plus. So I think I saved one guy from the potential of going down the wrong road.
So those Canadians, I've seen those all the time. They're like 1.5 ounce, 2 ounce, the wildlife series, or some.
They're always some wildlife.
Yeah,
thing.
they're wildlife things.
Yeah, it's so they have these exclusive coins, and they're usually like from 2017 when the scam started. And then they sit there and they tell the end user on the other line, like, we have these special coins that are exclusive to us. You can't get them anywhere else. And if you buy them, your IRA is going to go to the moon because these are like exclusive and they're great.
Mm-hmm.
And the truth of the matter is, when you go in the secondary market, you see them all over the place because people have sold those things off for melt. I mean,
we get them all the time. Somebody does a big IRA sellback and they lose their skin, and you see them on SD Boyne's deals page at 99 cents over spot. Because
yeah,
and at that point they're a pretty good purchase.
Sad.
Yeah, exactly. Someone's loss is your gain, but that loss there is typically like
it's significant.
I mean, it's literally putting people in their retirement like poorhouse. I mean, that's what we're talking about here.
SD Bullion is an island of truth, trust, and value when it comes to IRAs. Gold and silver IRAs. Don't be taken in by the fraudsters. They're the real deal. We got to get to questions, man. We really do. And I want to shout out JT Coin Rings for that $2 super chat. Hello, Yankee, Chase, James, and the chat. Good to see you in here, JT. And Crawfus has a question right to the front of the line. When will the gold to silver ratio go downhill? When are we going to see it in the 40s or 50s and 60s?
Before we got on here live, I was looking at the 1991 pop that got to 106. And, that's more or less where we got 105 recently. And I also looked at the 2021 that went to like 124. And generally, a month later, you're going down a bar, and then another month later, down another bar. In 91, it went from like 106 to just below 80 in a matter of 4 to 5 months. In 2020, it went from 124. By August, you're down at 69. So if past is, prelude in terms of what we're looking at coming ahead, you have a 106. I mean, maybe that's the high, or 105 or the recent high.
Right.
And then you're talking, this is happening in April. So you're looking out in like August, September. It's something it's possible it could be down the 70s. That's entirely in the possibilities of what could happen here for silver. So this idea that, the GSR is going to go up forever I see it sprayed around in graffiti all over social media, because you have a lot of the most whiny complainer type folk. They basically just sit around saying, the GSR will never come down. And the truth of the matter is, the majority of people aren't fretting. I think the majority of people kind of understand the bigger game afoot, and they see this as a real opportunity to get silver at a cheap price relative to gold. So yeah, the idea that by the summer it's going to be in triple digits, it's hard for me to fathom that, unless we go through an absolute derivative explosion and the banks all start failing. So in that situation, you're going to have bullion priced differently than what spot is anyway. I mean, it's going to be very difficult. That'll get way out of whack. Yeah. Yep. You're going to be talking about, like, it's going to be difficult to kind of come up with price discovery.
All right, questions. J Marble, thoughts on copper pennies? Oh, before you answer that, I just saw a video where there's people are playing the arbitrage on 2025 pennies, thinking it's it. That's the last one. I think it was 2025 Ds, and you can buy a whole case for like $25 and then turn around and sell it on eBay for like $675.
Oh my gosh!
always somebody trying to flip something.
No, seriously, and they're selling them. So I don't know. What do you think about copper pennies?
I mean, the melt on this 97.5% zinc now is it's basically 0.6 of a cent, right? It's 0.7 of a cent, and we're talking zinc. It's almost now at face value.
Yeah.
Zinc.
Now
look at the copper
was at 1982 and prior. Is that right?
1982 and before, it's at 2.7 cents. And I went down this rabbit hole with thankfully for our AI has helped me a lot in research and deep research. I found out, like, all right, let's assume that we could take all the pre-1982's copper pennies in the United States and gather them up in a warehouse and then melt them down. And how long is that going to last us in terms of copper demand? And I thought it was going to be longer than this, but it wasn't even a half year. Like the idea that like we could have some copper penny buyback program and like get huge copper reserves is a joke. Like nowadays, the copper demand is huge. So,
Mm.
those pre-82s, great, hoard them if you want. I mean, it's not that, 2.6 cents versus a cent, and it's illegal to go sell them and melt them down and stuff like that. So, I mean, it's one of those weird things where people sometimes stack all these old pre-1982 pennies, but I'm not really sure where the arbitrage is there. Copper is it's the third monetary metal, but it stores no real value in terms of gold or silver comparison.
So we cleared out my dad's home. He's my 92-year-old father who lives just a mile away from me, and I just saw him today. I cleared out his house. Papa Yankee had a box of pre-1983 pennies. I mean, just rolls and rolls and rolls of pennies. I'm like, Dad, did you know they were getting rid of the pennies? Like, no, I just thought they might be worth something. I got a pile of pennies now. So anyway, I thought that was pretty cool.
Yeah, every great granddaddy farmhouse has those
Right. All right, Chase, here's a couple series questions for you. When will the Commander series be made in 1 ounce? And when will the next Truth series coin drop? And there's a bunch of them in there, so I'll bundle them all up. Commander series be 1 ounce, and Truth series coming.
Don't have a great answer on the 1 ounce. It's definitely something that's been talked about, but nothing has been really set in stone. And then on the Truth series, I would say if they're probably on our email list if they're Truth series buyers. So what are we in April? It's got to be coming pretty soon. It's got to be coming pretty soon. There's so many of those. There's 4 a year. So do the math.
I know it should be in May.
It's not on the calendar right now. Yeah, it's got to be in May. It's not on the next week or two calendar right now. I know that because that's about how far we're usually planned out.
and the Commander is what?
We do have the next one picked, and it's a very, very interesting, different one than
I tried
has
this
done
all
before.
the time. I did a little. I thought maybe he'd slip up, but okay. And the Truth series, it's just great. I love that series.
Yeah.
Would you trade your gold for silver now? Bill wants to know.
Would I trade my gold for silver? No.
At 100 GSR.
I was considering it.
You really were?
It. Yeah.
I think it depends on
play the GSR.
Go ahead.
Let me clarify that. I was considering it in my retirement account because there's no cap gains, right?
Yes, that's smart. Yep.
Yeah, I'm not considering it with my
physical
savings account stack, right? With my IRA, where, again, we didn't talk about that, but that's a benefit, right? If you can make swing trades in there and make a significant amount of profit, you don't have to pay any taxes on it, right? There's no cap gains, so
that's smart.
I was considering doing it. Yeah,
that would be the only.
I bought more silver.
That would be the only place I would actually do it. At my age right now, I have my gold for a reason. I have my silver for a reason. I really want to keep it for the same reasons I got it in the first place. I'm building those positions, but in my IRA.
Yeah, that's the handy thing about like a Roth IRA or traditional. You don't have to sit there and do all the paper macheing after the fact and know where your taxes are and keep track of all that stuff. It's just much cleaner if you're going to trade the GSR.
Aaron wants to know: is a bank run equal a rising silver price?
Normally,
jeez, real one.
I don't know, James. You might have an opinion. It's the problem is it triggers a rise in premium, right? So which makes silver harder to get. So it's always a case like if with insurance, right? You got to buy before the bank run. You don't want to be buying in the bank run.
Because in a worst case scenario, it's going to be unobtainium. That's what I'm worried about.
Yeah.
You can't get it at almost any price in some cases. So I don't know.
If it's true that the second half of the 2008 global financial crisis is out there and it's going to be bigger than last, because of all the debt, all the paper macheing we've done. 2008 you had spot silver at 9 and bullion at 18. And then they started doing the infinite QE program and it went to 50 within a matter of 3 years. So, just think in terms of those, like that was 2008. What could happen in the future if you have a kind of scenario like that?
Here's a simple one, maybe. What size capsule for that 1/10 gold Commander? Do you know what that capsule size is?
No,
maybe
but it'll be it comes in the capsule.
It does.
So,
true.
Yeah, it comes in the capsule in the little Certilock card.
Right.
Scottsdale mix. So it'll be on the product listing.
if it's, let's see, if it's true the U.S. isn't buying gold, then when so many other countries are, why do you think the U.S. isn't buying gold? Because maybe we can't afford to.
Yeah,
I mean,
that's a good question. I think that the idea of how much we have, 8,133
Yeah.
tons, I
Right.
don't think that changes. And in the future, it might grow. But I don't think you ever get like a transparent audit. I mean, empires don't do audits. And I just don't think that that's going to occur. I think what you may see is, one of these 1970s PR things where they go in the vault and they live cam it and it's all fun and they flood the system with cool pictures. But I don't think you're going to have, 4 different accounting teams who are third party and trustworthy, who go to all the different places and count every ounce and drill every bar, do all that type of work that it takes to do it correctly.
Although,
I mean, it's
although
not
that
in the upside interest of the United States. They're not
No.
doing that. If
that
anything,
Well,
shoot
it sounds
himself, that
like-
shoot himself in the foot. But it
Yeah.
is interesting how that whole Fort Knox thing has just quietly gone away.
oh well, there's
wait.
people out there on
Just wait.
Twitter just laughing every day, like, "Where's that audit?" Just joking with people, making fun of how many people got psyoped by that.
Don't you think the inverse of that question is why are other countries buying gold? And some of the answer is probably because the U.S. is still the reserve currency of the world. So
Yeah, the question being, they're buying it because they don't trust our debt and they don't really trust our dollars, and they
don't like the sanctions.
Yeah, they don't like being
Exactly.
frozen. I mean,
Yeah.
if you think about Russia, it's 300, 400 billion. That's like half of their reserves got frozen. I mean, and Europe was involved in it. And so, yeah, the rest of the world saw that and they thought, well, we could be next.
When are the 2025 Eagle Privy Silver Eagles going to be released?
The first 50,000 are already on the market. Same as last time. We already sold out of the MS70s that we were able to buy,
Right.
and so now we're waiting on some information. Last time they put out the other 450,000, about 60 days after the first 50,000. So yeah, I would expect those sometime in the summer. The actual BUs, if you want to call them that, because what happens is the first 50,000 go to one entity. They send them all to grading. And so if you're getting non-graded, this is actually really important. I'm glad they asked that. If you're seeing listings for non-graded, Silver Eagle privies, whatever they're calling it, those are rejects. Those are 100% rejects from the grading service. So don't buy them. Just wait. You can buy them when the 450,000 get released to the rest of the dealers like us. You'll be able to come to SC Boyne and buy them and mint cert first 30 tubes that you can save and send to NGC whenever you want for an early release designation at a fraction of the cost of what you'd be paying now. So yeah, until everything's released, if you're seeing a raw Silver Eagle privy on the market, it's a reject, 100% reject.
Good.
So
very good.
keep that in mind.
So we got a new stacker who dropped a question. I'm new to stacking silver. I got 3 tubes of Eagles and I have 1 tube of Maples. First of all, congratulations. That's excellent.
Awesome.
Smart moves. Should I start focusing on junk silver right now, or should I keep working on more tubes of Eagles and Maples? I like feathering in some.
Yeah,
I call them constitutional 90% silver. Fine, it's called junk too, but
90%.
Yeah, 90%'s good. Maybe have a target. I personally like to get one of those barter boxes. I've filled 3 of them now: the halves, the quarters, and the dimes. And you can find a link in the description of any of my videos for those boxes. It's kind of fun to have that box and have a goal and just kind of slowly, I'm going to get an extra tube of dimes. I'm going to get a tube of quarters and just work that in as you get your rounds and your other 1 ounce coins.
Yeah, there's really no downside, right? So,
all right. So what market chart does SD Bullion look at to determine their prices?
I think I know what they're asking. So
yeah, I do too.
Like how do we get the spot price that we're selling off of on the website? It's basically a third-party service that's going to be a blend of different pricing feeds, right? It's pretty complicated stuff.
And they
actually,
all do it, and everybody does this.
Yeah, that's why everybody's prices is. I mean, it's impossible to have one price that everybody's trading off of because it's all technology that's coming in. It's got to be updated. Actually, I was just on a call for 3 hours today as we're trying to re-architect this right now to make it kind of better for a bunch of different reasons. So, but yeah, I think the main difference is it's a physical price versus a futures paper price, right? That's the difference when you're buying physical versus trading contracts.
Mm-hmm.
Yeah, because we've gone through an era, right, where there's gaps between futures and spot, and there'll be backwardation where futures will
Yeah.
fall between
Yep.
below spot. So
Yeah, a lot of people don't get that. The price will separate. I mean, when you're actually on a trading bullion desk in these crazy times, I mean, silver can be 50 cents different. Gold can be, I think it went as high as $80 difference during COVID. Uh, and that's the prices that, if you're actually buying physical that you're buying and selling on, they're not giving you the futures paper price. It's physical. So you got to pay what the physical is worth.
Chase, I've heard this one before. Is SD Bullion ever going to open an office where I could pay cash? People want to pay cash. That's your local coin shop dealer. It's tough. Yeah, you totally do get that. And then get shipped silver later. Don't want to put cash in a bank and get silver from you. Normally, I pay by check. It's tough.
It's possible in the future. I'd be here in Texas if we did it.
Oh, wow.
So it's definitely on in the discussions of doing something here like that.
That's your corporate headquarters. I got to get down there.
Yeah.
I got to get down
Yeah.
there. Man. I want to see that. All right. Is Warren Buffett buying silver from SD Bullion? If he was, you wouldn't be able to tell us, right?
It'd be against our privacy policy to tell you, but I don't think he is.
Yeah. Britannia's versus Maples. Mason wants to know.
Brits versus Maples.
I'm showing a Brit right here on the desk. Which one?
Brits are usually, a little bit cheaper to buy.
Yeah.
Yeah. They're Brits and Maples usually sell back for close to the same rate. The one thing you didn't see in COVID and the times that James talks about in 2011 is you didn't see that the Brit and the Maple kind of gap up on premium like you do with junk silver and you do with the Silver Eagle. So that's why I always favor starting with those. Silver Eagles will be a little bit more expensive, and for sure, but it's provided multiple arbitrage opportunities just in my short career where you can sell Eagles back and convert them over, especially if you're in an IRA. You can improve your stack by, last time it happened by 30% by doing nothing other than swapping Eagles for bars, and you don't have to worry about any cap gain tax. So Maples Brits, I think, is a toss up.
Yep.
Start with Eagles.
James, what does this question make you feel? Give me your feels on this. How can I sell all my silver to SD Bullion?
Feel? It's tough really to want to sell any silver. This is the time you should be buying silver, not selling.
Amen.
So, again,
everybody's got a different scenario.
True.
Sure. Of course, but if the S&P 500 is at bubblicious zones, you have the S&P 500 versus silver at a place that the only time it was higher than this was 2000 bubble, and we're well above where it was in 1929. So it's just on a relative basis, silver is still dirt cheap. So people can do what they want to do with their money, but I personally wouldn't dare sell silver at these prices.
Got a question. I'm 62. Should I close my 401k to swap for gold or silver? Wow.
You can't really close it, right? If it's an active 401k, you'd have to leave your assuming that you're actively working at your job, you'd have to quit your job. Now, I will tell you that there's a lot more 401k plans out there that allow you to go into physical than you would expect. So if you're at an active company with a 401k, you can talk to your plan administrator and see if they'll let you roll over some of your funds into a self-directed IRA, which is what we support at SD Bullion.
Now at 62, though, he could roll that out. I think that depending on the plan,
that's
62.
part of it. Okay, yeah. You're right. Well, in that case, I don't know. I still don't know about a 401k plan, how that works.
Yeah. You should be able to do that.
I see what you're saying. You'd be able to take it, but I don't know how. Every 401k plan is different.
You're right. Check with your custodian there, but I know what he's trying to do. You might not want to put more into it, but I think he's trying to protect, and this is so important for people to try to do it. I think we don't have to preach this as hard as we did before this debacle, right? With the markets, but now people are really waking up. They know they need to hedge in their retirement.
So I would say for that person, call. So once you call the 800 number, it's extension 4 for the IRA team, and basically tell them your scenario, and they will help you figure out if and what you can do in your current scenario regarding a 401k. If it's already in an IRA, then that's totally different. Yeah. you can roll that sucker over and get physical.
I have 3,000 silver Libertads. Should I try to sell them at $40 a pop and buy regular silver?
Ooh. Sounds
Can I give you my this is my philosophy. Keep what you have, buy what you're after. Stop trying to exchange everything. I get more questions on people like, should I flip this for that, change that, sell this, change it? And a lot of times they forget, they lose something in the transaction. Just build your stack. If you made a mistake, and I don't know, buying Libertads is a mistake, but if you look at it now and you have different perspectives on what to buy, just say, I learned that. It's still silver. It's still valuable. I'm going to keep it. And then target some other purchases in the future. That's my opinion. But I wouldn't flip him.
Yeah, there's going to be fees in there that, I mean, there's going to be, you're going to have to,
there's costs.
I don't know how you're doing it, but there's normally costs when you're trading physical, even in swaps. So the juice has got to be pretty big to squeeze it normally. Like when you're able to sell Silver Eagles at +12 that you bought for +3. Okay. To me, I'm doing that all day.
Bill Bix Weir knows. He says there is almost unlimited gold in the Grand Canyon, more gold than silver. Oh, there's a lot of gold. There's golds on meteors, but getting that out is tough. Extracting it is the challenge, right? So, man, it's true. I'm curious to know how much gold we have. What was it? Greenland. I was just watching, I think it was 60 Minutes. They went into Greenland. They went into this mine like miles in, and they got out of the car. He reaches down, picks up a rock, and you can see the gold right there. Boom. And it's like, but getting it out of here is the challenge, right? So, it's interesting.
There's a lot of platinum in the mantle of the earth, but that doesn't mean we're going to get it. I mean, it's kind of clownish. And the other thing is, this is unfounded. Bix says that, but I mean, it's Bix Weir talking out of his camper.
All right, so we got a few more questions, and then we'll wrap it up here. Is working security at SD Bullion the best job ever? I don't know. Rocco thinks so. It's pretty awesome. Their security is top shelf. I'll tell you. You do not mess with their security. Let's see. Want to buy some off-grid land in Maine for silver? No. Buy silver. Let's see. Thinking of buying gold eagles. Should I invest all at once or spread out the purchase? My investment amount is $50K.
Good question.
I mean, I spread mine out. I assume you're talking about cost dollar averaging, right? I cost dollar average. It helps me sleep better than if I spend all $50K and then you know how it is. It's like as soon as you buy, the market goes down the next day, right? So just for that reason alone, for my sanity, I like to buy a little bit at a time.
You agree, James?
Yeah, I think you want to get random gold eagles. There's no reason to get the 2025.
Yeah, agreed. Yeah. Whatever's cheaper.
Yeah, and I mean, if you're looking at gold versus the 200-day, it's really a question of, do you really think? Because I think it always goes back to its 200-day. The question is, does it do it at a point where it's higher than it is now, or does it do it sometime soon and go below 3,000 one more time? Because there's always a tangle around the 3,000 level.
Right.
So that's why doing it all at once is kind of scary. So I'd probably break it up into the purchase of like 3 over like a 9-month period or something like that. I wouldn't go all in at once.
Yeah, and you kind of touched on Fred's question. What is better to buy? Sealed monster box American Eagles or backdate Eagles? Thank you for your answer. It's kind of a mix there.
I have a stronger. Yeah, I assume that's silver.
Well, yeah. Let's assume it's silver, but you never know. But I think there's two things here. One is sealed versus not sealed, and the other is 2025s and backdates. So which way would you feel if they're unsealed 2024, say, and like 2014s, or if they were sealed 2025s versus a sealed backdate? What would you go for?
James might have I have a pretty strong opinion now working in the bullion space for this long. I'm a big proponent of sealed boxes and not opening them. Yeah, because
the one concern I have is if it's coming from secondary market, you have to cut them and look anyway. I mean, that's unless it's coming from a distributor that and trust, and know for a fact that you can put your brand on the line and inside on washers. But like those are straps. I mean, you know how easy it is to counterfeit plastic straps. So the
Interesting.
concept of not cutting the straps and therefore it's going to lose value, I think that's smoke and mirrors. A lot of the marketing that happens in our industry. I mean, just the thing is, you can cut them and look at them and make sure they're there. My suggestion is just don't take them out and play with them, because you're gonna start scuff them up.
Okay,
And keep them in their tubes so they stay brilliant and uncirculated. Because if you do sell them, whoever buys them wants to make a market and sell them to retail public. You want them to be in perfect mint condition. So keep them in their tubes. Maybe have one tube that you play with, and the rest, just keep them mint condition.
Good answer. All right, this is the final one, and it's a GSR. What is more likely? Gold comes down or silver goes up to close that GSR?
Silver goes up, right? I just can't see a world where gold's going down.
Yeah, it's hard to see it go below 3,000 and stay there long. If you have that situation happen this summer, it probably won't be that long where you have the opportunity to get gold below 3,000 an ounce. To get bullion below 3,000 an ounce might be over and behind us. Like that's the worry.
Wow.
Yeah, I mean, just think about that. You'll never be able to get gold below 3,000 an ounce.
Yeah, but it didn't take that long to happen. That's what's crazy.
Well, it
I feel
did.
Like just yesterday it was like $1,800.
It was yesterday. Yeah, yesterday was 2,000 that we were having this discussion.
We were having this discussion, weren't we?
Yeah,
and it was building its support over and over in the market, in the futures market. It was just keeps building. The more people, and it's harder and harder to break through that support. So, it dropped below 3,000 back when this whole thing broke and it got crazy. And I immediately got on SD Bullion's site, went to your deals page, and bought a $20 gold Liberty. It was a great deal, and I can't wait to get it in the mail. So, all right. Well, guys, this was a great episode. Thank you guys so much. And thank you, all of you watching Mastering Metals. Make sure you subscribe to my channel. Hit the bell icon so that you will get notified the next time we have you two on, which will be next month. Who knows what it'll be like then?
Yeah, that's a great point.
Really, right? It's always exciting to have you both. Thank you. Appreciate it.
Thanks for having us.
Thank you.
All right,
Have a
take
great
care.
night.
Good night, everyone.